a real case to be made that while you can separate money from the state, that a lot of Bitcoin's values are inherently American values. This openness to all, as long as we're all willing to do the work, the ability of, families and moms and dads to store the fruits of their labor across time and space. That was, something that, really resonated with me. Somebody has a stack right now. If Bitcoin goes to $200,000, that's twice as much liquidity that they might be interested in unlocking at some time and at some price to take care of their needs today while maintaining, ownership and exposure to Bitcoin appreciation over time. Like a lot of things in Bitcoin, we're so early, but I truly do think that collateralized lending is one of the most conservative credit structures that you could consider.
This podcast is entertainment, not financial, tax, or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Hey everybody, welcome back to the Bitcoin Frontier podcast. This week I have on Jon Melton from Unchained. Jon, welcome.
Thanks very much, Joe. It's good to see you as always.
Absolutely. Great to have you on the show and excited to talk about this. Jon, for people that may not know who you are, what was your professional background before getting into Bitcoin? And then how did you originally get into Bitcoin?
Sure. So following college, I spent 13 years at Morgan Stanley, mostly in New York, worked in London as well. Nearly all of it was focused on foreign exchange markets in a sales and trading capacity with their wealth management and PWM arm. So, FX markets were really interesting and a great sort of gateway to macro, which I think, is one of the things that primed me for Bitcoin. And,
Nice.
As to the piece of, how did I get into Bitcoin? In 2017, it was an interesting time for Bitcoin. I certainly didn't go into the year knowing anything about Bitcoin, but it was the year when Bitcoin went from, I think, $1,000 to, blow off top of $20,000. And I was at a point in my career where I was really interested in finding something more entrepreneurial and potentially outside of Wall Street. At that point, I probably had 5 or 6 kids. I had gone from commuting 25 minutes to an hour and a half from my home in Connecticut down to Times Square. And Wall Street had changed a lot since I had joined Morgan Stanley in 2005. I think, a lot of the risk had been taken out of the Wall Street, out of, those sorts of jobs. And I was really open-minded to something that would allow me to see my family more. And like I said, be a little bit more entrepreneurial. So there was an event that Morgan Stanley sponsored in September of that year. I think Bitcoin is probably $4,000 or $5,000. I suspect that lots of hedge fund equity clients were asking about Bitcoin and crypto. So they put together a room full of industry speakers. One of them was somebody named Ted Rogers, who has become a great mentor and a friend of mine. And he was the first employee at a company called Xapo. And Xapo was a first generation custodian founded by Wences Casares. And Ted gave a talk. It was basically, the Wences talk about, Bitcoin and its place in the world, over millennia really, and thinking about money. And, ultimately, a couple things resonated with me. Number one, ultimately, thinking if Bitcoin is, a once in a 5,000 year opportunity, that's really compelling. And the fact that Xapo was this remote company pre-COVID was kind of a Bitcoin thing. But that was really interesting. So that really started me on my journey. And that was, like I said, September 2017.
Nice. Yeah, it's an incredible journey. When you first heard about Bitcoin during 2017 and the price was, just going exponential that year, were you skeptical at all at first, or were you like looking for a solution, to all of those problems that you just brought up so seriously that you're like, I hope this is true. I want this to be true. I'm curious.
Yeah. So I was actually working on sort of a crypto idea with a good friend of mine. And again, like I was just open-minded. He was a great friend of mine, and sit down and kind of bat around this crypto idea. And hearing about Bitcoin, especially from the Wences Casares, Xapo, Ted Rogers worldview, and then going deep with resources like early Andreas Antonopoulos, Felix Martin's book, Money, the Unauthorized Biography, thinking about money as a ledger. It was one of those things where, the deeper you go, it's very credible. It's all open source. And a lot of the values, really, resonated with me. It's a fair, open system. It just made a lot of sense. And I think that Bitcoin resonates with different people for different reasons, but there is a group of people that they get conviction by doing the work. And even though that conviction or enthusiasm isn't shared by folks who perhaps seem like they should have the answers to financial or investment questions, that's okay. I think you have to have a little bit of an innate comfort of being a little bit doing things a little bit differently or thinking a little bit differently, and that definitely there are different areas in my life where I'm kind of comfortable doing things a little bit differently.
Yeah. So when you first started thinking about Bitcoin in 2017, did you bring it up with your Morgan Stanley peers, and what did they think about it? And then do you keep in touch with any of them today? And are they like, wow, that crazy Bitcoin guy, he was actually right?
So on a day-to-day basis, I kept my head down. But certainly, there was a one dear friend named Stephen Millard who ultimately became a coworker at Silvergate, where I spent a great, really, really enjoyable part of my career helping them to build their Bitcoin collateralized business. And every day we would escape the trading floor, get off campus, have a cup of coffee, and I would share kind of what I was reading, what I was thinking about. I ultimately flew out to San Francisco and sort of engaged Xapo, and that was about a 9-month process between sort of finding Bitcoin and resigning. And he ultimately became, a serious Bitcoiner. And like I said, was really instrumental in building the collateralized lending business at Silvergate. But, broadly at Morgan Stanley, I didn't bring it up. I've kind of kept in touch as I could, because I think it's really interesting just to kind of take the temperature around, how the broader, financial ecosystem will interact with Bitcoin. But yeah, there's, at least one person who, it resonated with.
Yeah, that's really cool. So you quit Morgan Stanley, joined Xapo, and then Silvergate as well. How else did you get to Unchained? Like any other key points that you want to mention in your journey to coming to Unchained?
Yeah, so I think, Xapo was great. My job there was really to go engage institutions about Bitcoin custody and trading. But at the end of the day, it's about Bitcoin. So at that point of time, 18 and 19 was a really bad bull market. But it was great experience to go talk to some of the biggest endowments and family offices and hedge funds in the world, about Bitcoin, and leave breadcrumbs that, really interesting, years later, people, maybe the family office didn't allocate, but somebody, came back and was like, hey, you helped me buy Bitcoin at $5,000. I had no idea. But that was a really interesting time. There was, kind of in the wake of the fork wars, and Bitcoin wasn't, I don't think, as settled as it was now. But Xapo ultimately sold their institutional business to Coinbase. So I was, out for a few months, really interested in staying in touch with Bitcoin and working in Bitcoin. And that's when I first met, I met Joe Kelly, the Unchained CEO. And I also met Alan Lane at a conference in New York right after Silvergate had gone public. So that was a friendship that developed over time and bore fruit. And, ultimately I went back to Morgan Stanley for the beginning of 2020. Didn't have the luxury of kind of, staying out forever, waiting for the perfect Bitcoin job, but I continued to stay very engaged. Remember reading all of Parker Lewis's work during that time, and trying to stay sharp on Bitcoin. And there was an opportunity that opened up in, the second half of 2020. Silvergate was just sort of coming out of pilot and scaling a very nascent lending business. And, it's kind of a great mix of my custody and markets background, and learned a lot about credit in both the upswing and the downswing, and sort of like the journey to Unchained. I think that's important as well. 2022, the back half of that was really rough for Bitcoin, but it also taught me, at our peak, we had nearly $1.5 billion in loan commitments backed by Bitcoin. And at Silvergate, that is, and we never had a liquidation, never took a loss. And that sort of, education between, the market volatility brought on by Luna, some of the other lenders in the market that, certainly weren't as focused or prudent as Silvergate, Bitcoin trading at $16,000, like understanding the value of collateralized lending as a lender relative to, unsecured lending in times of stress. That's stuck with me, and that was really, formative. And then, Silvergate wound down voluntarily in, early 23. And, I joined Unchained, last summer.
Yeah, I want to dive into the idea of Bitcoin as collateral and obviously Bitcoin lending, because I think it's such an interesting, unique segment of like finance and markets that I feel like so few people have really grasped. So, like, from your perspective, do you think Bitcoin makes as a good form of collateral? And when people say Bitcoin is a good form of collateral, or Bitcoin can be used as collateral, like, what does that even necessarily mean?
So I think, yeah, I do agree that Bitcoin is truly pristine collateral. And I think that the quickest way to get there is to sort of understand, we live in a world that is, just overflowing with credit. And some of the things that we lend against, is a financial industry, or things like cars or houses or stocks. And each of those, in turn, have qualities that are far inferior to Bitcoin. So you buy a car, and as soon as you drive it off the lot, it's worth a lot less. And maybe you bought a blue car, but if you ever need to sell that car, somebody wants a red car, so you've got to find somebody specific. A house is, a specific piece of property. It's not liquid. You can't, sell part of a house. You can't pledge more house. Stocks trade on an exchange, but Bitcoin is perfectly fungible, divisible, but portable, trades 24/7. All these are qualities when you stack it up next to other forms of collateral that we all sort of take for granted, or your personal credit. Collateralized lending is powerful, but when you have something like Bitcoin, it's just on a relative basis. It is something that you can, if you need to, in a distressed situation, you can liquidate, very quickly. So that's really appealing from a lender's perspective.
Yeah. I've heard sailors say this, and I'd imagine you'd agree, but I'm curious to hear your thoughts. Sailors kind of framed it as, we have the money, we want to borrow a little bit of money, and then we'll promise to pay you back the money in the future. Whereas like a traditional company or business might be like, we hope to make money in the future, so let us borrow that money because we think we might be able to make money and then eventually pay you back in the future. And so like it kind of flips the script of like, wow, like you can actually just borrow against your Bitcoin. You already have the money. Like that's the money right there. Does that make sense from your perspective? Or
it does. And that's, part of like, one of my, I've found myself in this great situation, personally, where I do something that I love. And part of that, over the years, certainly, post Silvergate, where I really think there's a huge gap in the market in terms of a real focus on Bitcoin collateralized lending, certainly not at Unchained, we've been doing since 2017, but is connecting the world of, the Wall Street world of credit and, sort of the world of Bitcoiners who in some respects are living in the future, some on a Bitcoin standard, increasing number of corporations. But I do think that what Saylor's highlighting, which you just mentioned there, is, sort of you look at the returns on different sort of, credit investments, whether it's, government bonds or high yield, HYG, the high yield index, or various like corporate bond indices or private credit in general. it's not, some of those returns, don't stack up very well compared to just borrowing against the money. And then, any sort of, balance sheet type lending where you're underwriting a corporation's ability to generate revenue, is inherently tied to macro. Whereas, collateralized lending is really driven by a confidence in the ability to control and sell the collateral. Like I said, that kind of going back to the Silvergate, kind of like working through a downturn. I think that model works really well.
Yeah. Thinking about this like broadly, like Bitcoin as a form of money or a form of digital capital combined with superior qualities that make it a good form of collateral for lending. To me, it seems very obvious when you put it all together. Maybe it's just because obviously we work in the space. What do you think that, your former peers at Morgan Stanley, like or just anyone on Wall Street generally that doesn't fully get Bitcoin, what do you think that they're missing?
So I think the first thing that a lot of Bitcoiners, because as you said, we're sort of in it every day. Bitcoin is still, even today, $2.1 trillion of market cap, a fraction of gold and a fraction of everything out there, the great charts that we've all seen. So I think that when you think about scale, at a small but growing commercial bank, Bitcoin-backed lending was a phenomenal business. At a place like Unchained, Bitcoin-backed lending is a really great business. I think that scale matters, and that Bitcoin is still really small, especially when some incumbent financial firms have, in certain sectors, basically monopolies or dominant positions in much larger scale business, like credit trading, for example, at a place like like Wall Street generally. And then I think the last couple of years have been terrible in terms of the regulatory situation. The credit business at Silvergate was fantastic, but I'd say Silvergate was probably ahead of its time. There were a couple other banks that were interested in it, but certainly in the last few years, that source of balance sheet has shrunk to near zero. And while there's been, with the new administration, a serious sea change in terms of approach, bankers, I think move very slowly. And I think, while that space seems to have loosened up a little bit, I think there are, a lot more that would like to see things, sort of, be more set in stone and even more established that, hey, this is an activity that is not going to get me, sideways with, my regulators, that my board and my investors. There's a lot of stakeholders in large organizations that have to come together. And even if there are two Bitcoiners on a board of directors or, operating committee at a financial institution, that might start a conversation, but it might not get a deal done. And then I think, I think that over time, I think the gap will get filled in, because, like I said, I think there was basically a crater in the middle of the credit industry relative to digital assets and Bitcoin specifically. But you see initiatives like like Cantor Fitzgerald, for example, that are coming in and that are starting to recognize that. So I suspect that will continue to happen.
Given your experience at Silvergate and then watching the regulatory trends like effectively completely reverse, how big of a deal do you think that is for like America and Bitcoin together? Like, was it really a massive sea change, or was it a small change in your mind?
I think it's a massive sea change, and I think that, like, not only for the financial participants who are more free to interact with Bitcoin and to build businesses around Bitcoin with much less fear. And like I said, I think that, it's all temporary. I mean, we have to, like, I think some, speakers, JD Vance at the Bitcoin conference is very, eloquent about the need to continuously engage to ensure those gains are more permanent. But also just around the framing about Bitcoin. I think that there's a real case to be made that while you can separate money from the state, that a lot of Bitcoin's values are inherently American values. This openness to all, as long as we're all willing to do the work, the ability of, families and moms and dads to store the fruits of their labor across time and space. That was, something that, really resonated with me. Saylor talks about, melting ice cubes, $500 million, that pushed him into Bitcoin. But, hey, if you've got a family, you've got some sort of an ice cube. It's probably not $500 million, but you'd really rather it didn't melt. So I think that the positive framing of the asset and what it can do for individuals and families, and perhaps even this country is really powerful. Again, taking nothing for granted, but I do think that it has been a material sea change.
Stop asking how to value Bitcoin. Start asking how to value everything else in Bitcoin. I recently co-authored a new report from Unchained and Strive, Vivek Ramaswamy's asset management firm. It's called Repricing the Economy in Bitcoin, and it introduces a new framework that changes how we value everything. Read it now at unchained.com/frontier. That's unchained.com/frontier. Yeah, I completely agree. I mean, I was thinking back to the 2024 conference, like before it happened, people didn't even expect a presidential candidate to potentially speak. And then Trump actually spoke, then he got elected, then he actually made the National Strategic Reserve. And, in hindsight, things happen pretty fast. I feel like the next potential big step that could potentially happen is the Bitcoin Act by Senator Cynthia Lummis. I know, you've probably heard, obviously, about it, but you're not a legislative expert. Do you think that would be a big deal for America? Do you think it might happen? And what might happen to Bitcoin if that gets passed?
Bitcoin to the moon. I mean, it would. I mean, it's really tough to think about, price in a scenario like that. I would agree with you and echo your comment that things do seem to happen, more quickly when you step back. Getting into Bitcoin in 2017, like Fidelity had not yet commercialized their business. I remember Intercontinental Exchange getting in, ICE later backed, like that was another big name that came into the space. And now it's BlackRock and, the vice president, coming to Las Vegas and, a huge voting block of people that support, digital assets and, and Bitcoin. But I think, the macro side of things, I think a lot of Bitcoiners are deeply interested in that. And, we're in quite a quandary at the sovereign level. And, I think there's a growing appreciation that the dollar dominance is not, is not an unalloyed positive for the country. And hopefully there's a greater appreciation that, a neutral reserve asset is in the interest of, of America, long term, and something like the Bitcoin Act and, saying, hey, we believe in that future, and we're going to start taking concrete steps towards, adopting this, global, neutral reserve asset of the, 21st century, at the sovereign level, I think would be, obviously, really meaningful and set off, a lot of interesting, game theory.
Yeah, I completely agree. I mean, it definitely seems like we're obviously going in the right direction at this point. I want to go back to Bitcoin as collateral and lending against Bitcoin. Just given your experience, at Silvergate and now Unchained, what's like the common use case for when people borrow against their Bitcoin? Is it they want to buy more Bitcoin? Is it they want to reinvest in their actual business? They want to buy real estate? I'm curious, and maybe I'm sure it's different for everybody, but are there any trends that you've seen over the years?
So, just to be clear at Unchained, we have a commercial lending product. So all use cases have to be for investment or, investment or commercial use case. So, there are sort of, if you think about the different, corporates that have adopted Bitcoin and their access to capital, one end of the spectrum, you have, Strategy, great company that has, really, pioneered unique, sorts of, at least in the Bitcoin world, the use of unique financing tools and convertible bonds and Strike and Strife. But if you think of a smaller, small, medium-sized business that doesn't have access to the public markets or these at-the-market offerings or debt instruments, Bitcoin on their balance sheet is, a very reasonable, asset to borrow against. So we certainly see, smaller, like I said, small and medium sized businesses of, various sort of, operating interest borrowing against their Bitcoin. So, given our clientele, we can't give financial advice, but it's reasonable to think, plenty of that, ends up, and we don't offer, like a leverage, margin, Bitcoin product. It's reasonable to think that some of that ends up in Bitcoin. But then you also have, the value of a collateralized loan where, like I said, you're underwriting the collateral. You're not underwriting, sort of a balance sheet. If you've kind of like walked into the bank looking for a loan, real estate or other sort of, deal driven, investment strategies where you the access to cash relatively quickly, that's another, another use case.
Mm. Yeah. What do you think about like interest rates when it comes to Bitcoin as collateral? Like I know you talked about kind of before how you'd have like high yield credit instruments and you lending against very esoteric type things and having like a high interest rate, but maybe it's mispriced relative to the idea that like you hold the money, you borrow against the money, kind of what we talked about earlier. Do you see rates changing over time, and how do you even really think about interest rates when it comes to borrowing against your Bitcoin, generally speaking?
It's tough because it's not a commoditized market, and I think the easiest comp for a lot of folks is the real estate market, which is largely subsidized and facilitated by sort of government agencies. So that's a challenging comp, but I think that the availability of lending capital will increase over time, and that sort of different pools of capital, banks and insurance money, and that those are really attractive pools of capital relative to sort of investment funds, like a credit fund or sort of an unconstrained fund that has the ability to maybe take a little bit more risk or sort of think about more esoteric investments or loans like a Bitcoin collateralized loan. That capital sort of comes with a higher hurdle rate. So I think that as time passes, as banks get more comfortable, as there's more sort of proof of work in terms of this is a way that banks can get exposure to this asset class, I do think that rates will come down over time.
Yeah, makes sense. Broadly speaking, since you've worked in the industry for a while, when these companies, small to medium businesses borrow against Bitcoin as collateral, is it early Bitcoiners that just have a ton of Bitcoin that are like, okay, I want to, get some cash out of it? Or is it someone that has an established business and they're like, you know what, I want to buy $5-10 million worth of Bitcoin, and then I want to borrow $1 million or so from it, reinvest in the business? Like, what's the distribution? Is it typically like early Bitcoiners that just have a lot of Bitcoin, or is it new businesses really getting into Bitcoin that also want to borrow against it?
We've seen both. I mean, Bitcoin's a super interesting, phenomenon, like ultimately fair, but it's really interesting when you run into folks that were just there early and made a decision and sort of survived through all the challenges of being an early adopter in terms of, custody and security to end up with, a really big stack. That can be just, an extra 0 or 2 at the end of their stack relative to what you end up, you usually see. But that's really, it's a great thing at Unchained because you do run into a lot of, OGs that, really, have a lot of trust in the Unchained team and the brand and the company. So we serve them. And then, there are folks that are, newer to Bitcoin. Lots of people have come in, I think, 2021, type cycle. And they're all in on Bitcoin. They're just, building their stack or have a different, a little bit smaller of a stack. And it should be noted as well, another use case that is kind of interesting is, obviously miners who have sort of this, sort of need to sort of continually reinvest in, in their fleet of equipment, that's kind of, depreciating over time. They've always been sort of it's a challenging business. But, debt is interesting for, for folks like that who have kind of, continuing CapEx needs, and, a loan obviously is a way to grow without, diluting equity holders.
A word in the Bitcoin collateral and lending market that I feel like has been thrown around a lot over the years that I think probably a lot of people don't even fully understand is re-hypothecation. I'm curious, what does that, like, what is that for someone that doesn't know what that is? And then what does that, how does that relate to Unchained's lending product?
So if you take off the re, then it's just hypothecation. And you can think about that as just pledging your Bitcoin. If I'm a borrower and I give somebody my asset and they give me dollars, I've hypothecated my Bitcoin. I've pledged my Bitcoin. If that lender then takes my Bitcoin and gives it to somebody else, that's doing that again, rehypothecating. And there are, good reasons to, they may, want to do that, potentially to get, lending capital, is one example. Or, in other examples where it's lent, and, that Bitcoin is used for, sort of investment activity. At Unchained, two really important principles to us are transparency and not rehypothecating ever. So our borrowers hold one key, we hold one key, and we have an agent, a collateral agent that holds a key. It's a regulated bank. So the collateral is always held in a 2 of 3 multi-sig address that the borrower with their private key is cryptographically linked to, and they can verify on the blockchain that the Bitcoin is still in the same place that you sent it when you collateralize your loan to get those initial dollars. So that's really powerful. And the reason that's helpful for borrowers is, anytime you sort of think about the security of your Bitcoin, you have to think about different risks. I used to work for a custodian. I've held my Bitcoin at a custodian. I now hold my Bitcoin in multisig because I judge that the risks, of, holding it at a third party, custodian, where when I made the move to multisig was probably 2021. And, there was, substantial regulatory risk against Bitcoin. And over time, who knows what the future of Bitcoin holds. But you diligence sort of your security setup. So when you diligence like the environment where your Bitcoin collateral, your hard-earned Bitcoin collateral that could, 10x or 20x, who knows, that's a really important thing to diligence and ask lots of questions about. So if you pledge it and you can see it on the blockchain, that gives you some comfort. If it's sent somewhere else, well, that's just another detail that you've got to sort out. Who's holding it? What's the custody technology? Who's the party? What permissions do they have? To do anything, if anything, with the Bitcoin, like what sort of governs like my Bitcoin environment when it's pledged for the life of the loan. And the final point is, at the heart of collateralized lending is a lack of control. So as Bitcoiners, like self-sovereignty is an incredible feature of physical Bitcoin, and something that I think Unchained is second to none in our support for facilitating that and making self-sovereignty incredibly accessible to a wide range of people who want to hold real Bitcoin. But when you pledge volatile collateral, you have to give up control. You don't get to hold 2 keys, you only get to hold 1 key. So inherent to all of that is a need to, trust your lender. No matter what the setup is, because they have to have the ability to, potentially in the case of a default, liquidate collateral. So I think that, rehypothecation is sort of related to transparency. And then, we can't escape, in a loan arrangement like this, the need to, to trust your, lender. And that's something that we've, like I said, there's various ways you can diligence that. I think, one sort of, high level thing we're really proud about at Unchained is the fact that we have been doing this since 2017. And, we've done over 4,000 loans. So I think those those are sort of our experience, and time in the market and commitment to this is something that, folks can, take some stock in.
Mm-hmm. So I guess you would agree that like the entire model of collaborative custody makes using Bitcoin as collateral a lot more transparent and a lot safer for both parties, I guess, for both the lender and the borrower.
It's just simple. And I think simplicity is really helpful when you think about risk management. Like you send your Bitcoin one place and it stays there, and you can verify it on the blockchain. So in terms of your diligence process about what is the environment, for my collateral during the life of this loan, that's a really simple exercise to assess. Whereas, re-hypothecation, then you're talking about different counterparties and custody environments that you have to that you've got to vet and risk assess if you want to be really, prudent. And a lot of our borrowers, as Bitcoin grows from, 500 billion to 2 trillion to 10, 20 trillion dollars, this market will grow. Our loan sizes have increased over time. These are real numbers, and our clients are trusting us with a substantial amount of Bitcoin. So I think these are things that all Bitcoiners care deeply about.
Yeah, I kind of want to dive into the topic of like how big this market is and can be. Like, how big do you think the Bitcoin collateralized market will be, 5-10 years from now?
That's a great question. I think right now it's probably around, just very much finger in the wind, so to speak, $10 billion. It's challenging in an industry with so many private companies. There's not a lot of, transparency. Galaxy recently did a report, and then there's also, other currencies and, other flavors of loan. Our product is really, lending dollars against Bitcoin, which I think is a part of the reason I love it. Is I think it's very, much speaks to long-term investors and Bitcoiners saving in Bitcoin, but having a need for liquidity, in the near term. So I think there's, structurally, really fits well with Bitcoin. In the future, another reason why I love it is it scales with the asset itself. So, gold equivalence, is 20 trillion now, but, unless people stop buying gold, that number is going to keep on creeping up, over time. So, who knows, what that growth rate is, but, I do know that, like, Bitcoiners who have more trapped value over time, somebody has a stack right now. If Bitcoin goes to $200,000, that's twice as much liquidity that they might be interested in unlocking at some time and at some price, to take care of their needs today while maintaining, ownership and exposure to Bitcoin appreciation over time.
Yeah. I mean, to me, like the Bitcoin collateralized lending market is probably like one of the most fascinating markets in like the history of financial markets, because it's like, kind of like you pointed out, there's two sides of the coin. The idea that Bitcoin is severely mispriced because, it's been growing massively over the last 16 years, probably will continue growing at a fairly rapid rate compared to everything else. But then also like the credit side is also mispriced, and they're both like, as the prices get fixed to both, it unlocks more capital for each other, and the lending market could get bigger and bigger. I guess it's kind of like the idea of Pierre Rochard's speculative attack idea, where it kind of becomes a positive feedback loop. I'm curious, do you have any thoughts on Pierre's work and, the idea of a speculative attack, especially in regards to using Bitcoin as collateral for lending dollars?
So like, Pierre is great. One of those guys, we should all listen to everything Pierre says. It's been a couple of years since I've read Speculative Attack, although I have enjoyed, his new podcast with Bitstein, kind of revisiting some of those earlier papers. Yeah. I mean, like I said, I think it's really interesting to have those conversations, to plant those seeds in a really focused way around the credit opportunity around Bitcoin. I think the challenge of Bitcoin-backed lending, for some of the credit market is, it's not, a trade. It's not a distressed, investment of something that, was trading at par and now it's trading at 80, and it used to yield 7% and now it's yielding 16%. It's a scale opportunity to grow and scale a totally new asset, class within sort of asset-backed lending, and something that, I have confidence that ultimately lots of household names on the, traditional finance side will, have to have, some exposure to. But it's not, no Bitcoiner wants to borrow at anything higher than the rate that, that they need to. And, a lot of credit folks, obviously every lender wants to get the most that, wants to earn a return on their fiat. But I think that over time, finding the right home for it where, ultimately this is something that you could, lend billions of dollars into, and have, risk, like I said before, it's not correlated from, sort of a macro perspective. This is something that is not, doesn't depend on, consumer preferences. It just depends on, is there a liquid market for Bitcoin, and can you control the asset? I think that sort of pitch and that framing, I think will, continue to have more of an audience in the coming years.
What's the next big catalyst or unlock for the Bitcoin collateralized lending market? Is it simply like, the price of Bitcoin going up, unlocking the ability for more people to borrow against their Bitcoin, or borrowing more dollars against the same amount of Bitcoin? Is it big banks coming in and providing capital at a lower interest rate? Like, how do you think about that?
Well, I think, this is, like a lot of things in Bitcoin, we're so early, but I truly do think that collateralized lending is sort of like one of the most conservative credit structures that you could consider. Give me twice as much collateral, relative to the loan that you're taking out. Like, I'm interested in sort of iterating on that concept with different structures, whether it's lines of credit or sort of longer duration, without sort of, margin calls. Like, these are all like interesting concepts, and they're, may take years to, build out. But I think that as folks get more comfortable with, okay, the worst case scenario for Bitcoin is taken away. And if you take some really conservative, sort of approach to what Bitcoin could be in the future, like maybe there are going to be funders for, low LTV, longer duration, loans against Bitcoin. So I think that like more iteration on the more availability of capital, more iteration on a greater iteration, more iterations on the, sort of products that are kind of out there right now. I think those are all interesting things to kind of think through and build towards.
Mm. Another topic that I actually want to get your thoughts on is stable coins, right? Like, given your experience at Silvergate, given the success of Tether over the years, becoming, holding effectively like over $100 billion worth of treasuries and other dollar liquid type assets, where do you see that market going over, the next 5 to 10 years, or do you even think about it that much?
Yeah, I mean, I think about, I think, dollar dominance is a term that, that comes to mind. And, if fiat is an experiment, it kind of had the thought that, well, it attacks the weakest currencies, first. And if there's kind of 150, 200 currencies, sort of the bottom currencies will get, eaten alive. Dollarized countries obviously suffer substantially, because they can't hide in assets, when the Fed sort of, abuses the dollar. So I do think that, stablecoins have been a really interesting way for folks globally to get access to, to the dollar. And I do think that, a world where people sort of, it's not a Jon Melton concept at all, but like a world in which people like save long-term in Bitcoin and sort of, fiat currencies exist in the world for, for payments and spending. I think, like I said, that's a, Wences Casares idea. That's a Bitcoiner idea. At Silvergate, we were interested in, obviously the stable coin, sort of tokenized dollar. Like, does it need to be on a blockchain? These are interesting things to talk about. But, another thing that has always been really interesting to me about Bitcoin generally, it's kind of related to your stablecoin question, is, how does the loan conversation, like, how does Bitcoin affect the real world? And I think that to the extent that you have public companies holding Bitcoin on their balance sheet that need a dollar, to carry on their business, that's a really interesting, use case. We lent to Marathon, we lent to MicroStrategy, public companies at Silvergate. And to me, like, that was really interesting to be at a Fed regulated bank lending to, public companies based on digital internet money. And I think that's, to the extent Bitcoin, and I think it is an increasing, utility of Bitcoin when you can get a conservative, safe loan, against the asset. And that's certainly something that wasn't available, at least not broadly, I think early in its life. And I think, that may even drive more adoption, more comfort with, holding the asset by corporates.
Yeah, no, that makes a lot of sense. Two more questions and we can probably start to close it out. What's something that you believe that most Bitcoiners would disagree with?
I know there's so many brilliant Bitcoiners out there. It's kind of tough to disagree with, to find something sacred that, that I disagree with a lot of Bitcoiners. They've taught me so much and continue to do so. Kind of touched on America earlier on and kind of like what the moment means. I certainly, I love this country. There are things that are more important to Bitcoin. Not that that's really controversial. But I am optimistic that, Bitcoin can be a solution for, and help America. And I think that, with all the political engagement and the work of the Bitcoin Policy Institute, and slowly sort of, all of that groundwork that's been laid, I think that's something, I'm certainly not a fan of large government or anything, but, or having the state control money. But I think that, that's something that over time, I think, like, people were gradually accepting that, Bitcoin could play a positive role, for our country and other countries.
Yeah, I agree with that. Last one, what do you think is the biggest risk to Bitcoin?
It's tough to say. I'm certainly, again, stand on the shoulder of giants in terms of, this open source technology and, folks that are far more qualified than I am from the technical side. And even, that, at its root doesn't give me a lot of pause. I mean, Bitcoin is a ledger and we've got the ledger, and Bitcoin has survived so much, even if it in its short, just 16-year history. And then there's, will folks, ultimately become apathetic about Bitcoin? It's kind of hard for me to consider people becoming apathetic about something that, kind of compounds at 50% a year. It's curious, even if you don't own, even if you don't own it, it's something that you're interested in. It's, has some mind share, and you've been, I think, persistently eloquent about, like, Bitcoin's volatility is a feature, not a bug, and it's it's a marketing mechanism. And then on the other side, it's, are government's going to find religion, so to speak, and, sort of choose the, the path of, fiscal responsibility. And I'm nearly through my friend Larry Lepard's book, but I that is a choice. But I think that it would come with so many consequences, that are broadly, unpleasant for so much of, these, nations' populations, that's unlikely. And that, hopefully, sort of slowly over time, as Bitcoin does, that, a neutral reserve asset, in the end can, sort of spark, if not a renaissance, sort of an off-ramp from, a failed experiment, with fiat.
I like it. Good answers. Jon, this has been an incredible opportunity to sit down with you and discuss this. Anything I didn't ask you, or any closing thoughts that you want to share in regards to Bitcoin broadly?
It's never too late. Bitcoin has been an incredible gift, to me. And like I said, there was a time in my life where I was curious about Bitcoin and looking for something more entrepreneurial. And I'm incredibly grateful, to the Bitcoiners in my life who provided me like not only the grounding in Bitcoin, folks like Ted Rogers and Wences Casares and Alan Lane, but a career. And it's a great community, and it's never too late to get involved with Bitcoin, to do the homework. If you do the hard things, one of those things is just, holding. I think it could be, super rewarding. And yeah, I would encourage everybody to look into Bitcoin.
I agree. Well, Jon, thanks again. This was an awesome conversation.
Thanks, Joe. It's always great to see you.